Fresh new week. Good morning. You're with us here on a new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Moti Oswal studios. It's a good Monday because we are coming out of that big victory yesterday, which we will talk about more and some visuals, etc. as well. So it's a good feeling. And then we are going into a week where there is a midweek holiday. So you start, pace up, and then you get a bit of a break, a bit of a rest, and then you continue forward as well. Those are visuals. Amazing win last evening, and of course, a big one for the India cricket team. Guys, good morning.
I'm so glad you mentioned this, Prashant. Good morning to you. Good morning to Nigel, because when Prashant started out by saying it's a good morning, I was wondering, oh, what? The context is right, because maybe not a good morning in terms of what we've got in terms of backdrop of global cues, especially US. But these pictures, absolutely great. The fact that there is a midweek holiday, even greater. So feeling good.
Well, goosebumps looking at King Kohli on the screen, right? What a champion. Don't rule a champion out. That's the message that came out from him. Stick to the basics. He said he ignores any kind of noise and just concentrates on the game at hand. And he did that yesterday. Hitting 100 last ball, fantastic for, well, it was a pumped up innings and, all-round great performance by the Indian team. So good, to see that kind of a performance coming in from our boys. And just one more data point. Yes, the market is a little bit wobbly. But I'll tell you what, the last time we beat Pakistan was in October 2023. The market made a bottom out there and it rallied from there. Just to cheer up the screen, So let's hope this time around as well. India beats Pakistan, the markets find some kind of stability. There's a hope, yeah. I mean, it's a data point. October 2023, that's the last time we knocked them out.
Must have hope, absolutely, always.
Absolutely. Let's start with what we have on the screen this morning, though, and take a look at what is coming our way, right? And it's not a good-looking screen from a U.S. market perspective, a purely U.S. market perspective, and maybe we'll look at other Asia screens, etc. So equities sold off. It was the worst day for U.S. markets in 2025. But, mind you, there was that big near $3 trillion options expiry on Friday. So, usually we see some heightened volatility, etc. So that's the context, that's the backdrop. But in any case, it was pretty bad. And S&P was down about 1.7 odd percent. The Nasdaq was down about 2.2, and the Russell 2000 was down about 3% or so. Now, just some levels. The S&P is 3 points away from the 50-day moving average of 6,010. We left off at 6,013, so that's an important one near term. Russell 2000 ended below its 200-day moving average. Now, of course, this is not the big runner. It's the Nasdaq and the S&P. Russell, of course, was starting to come back up. It's down below 200-day. The CBOE Wix, the fear gauge in the US, that jumped 16% to 18.5. And that's the other one. Safe haven currencies rallied. JPY, the Swiss franc, they all went up against the dollar. The 10-year yield lost about 8 basis points to 4.43. So essentially, you had an equity sell-off and a bond rally. You had about 6 to 8 basis points lower across the yield curve if you look at different maturities. The dollar index at about 106.6 or so. Now, 2 or 3 reasons essentially behind this price action. One is U.S. services PMI contracted. That was the first contraction since the first quarter of 2023. And services sector in any country is the more sticky part, and that's starting to come off is cause for concern. Now, you also had the Michigan consumer sentiment data which came, but within that, what markets latched onto was long-term inflation expectations, which rose to their highest since 1995. So you basically had, growth weakening a little bit, and of course, this is inflation expectations going forward, 3-5-year expectations, but that actually firmed up. There was also reports of a new coronavirus which exasperated the moves. I mean, when I say moves in bonds are higher and equities lower. And maybe, more on this later. But, as I read a headline, they said, well, this is something which has got pandemic potential. I mean, that's some way to put it. But this is, of course, this was at the margin. This was not the big driver. NVIDIA earnings this Wednesday going forward. I mean, as you look ahead, this is the big one, which will be a big sentiment driver near term. And I think that may determine what the big stocks in the US behave like. Oil prices down 3%, essentially on the back of weakness. $74 a barrel is around where oil prices left off at. Now to circle in the levels here. On Friday, we broke the low of 22,725, but we actually broke it by a small margin and then recovered and then bounced. The next Nifty support stands at 22,620. I mean, essentially the price action on Friday, and of course, then what's happened in the US session, raises doubts whether we've got one test, one swoon left here. But the supports next one's at about 22,620. And then, of course, on the upside, the resistance stands at 23,050. And then the 20-day moving average, which comes in at about 23,216. These, of course, some distance away, given the sell-off that we saw on Friday. The Nifty Bank, it broke the previous low of 48,804. This is, of course, on Friday. We have the support coming in at 48,624, which is the lower end of the Bollinger Band, daily Bollinger Band. Resistance for the Nifty Bank comes in at the prior high of 49,628. A bit of a tentative session, especially because of what has happened in the US. And I think in the next two to 3 days, we'll know if what we saw in the US was just a one-off and the market is shrugging it off, or there is some entrenched weakness which is starting to appear. GIFT Nifty will give you the first sense of how we are likely to start this morning. That's 100 points lower straight off the bat. 22,690, 22,620 is that first support based on Bollinger Bands. Shrubi.
Prashant, I was actually looking at this, COVID-2 reports that came in over the weekend as well, because you get really nervous. But I don't know, maybe we should just keep our fingers crossed. Right now, first of all, it's not there in humans. Yeah. It's a bat virus. It's called, in case you're really interested in the name, HKU5. COVID-2. I think the reason markets also getting nervous is the scientists who discovered this in China are from Wuhan once again. So therefore, it just brings back really bad memories. Perhaps that's the reason. But again, I mean, coming to markets now, and that's the good news across Asia, because Asian markets are not sliding like what we saw on Wall Street. Markets are fairly stable. There's some buying in markets like the Seng. The Japanese market is shut today for a local holiday, so not getting cues from there. But of course, we have to see if there's stability. Even futures, Wall Street futures, I mean, maybe perhaps it's a sense that it got a little excessive on Friday, because over the course of last week, Thursday and Friday put together, over 5 days, Wall Street is down in a big fashion. I mean, the Nasdaq has fallen about 2.5%. The Dow and the Nasdaq are down 2.5%, and the S&P 500 is down 1.7% for the week as a whole. Some pullback is what the futures are indicating. Let's come to domestic cues, because we have lots of those cues to watch. The fund flow picture, more of the same, net selling of around 3,500 crores coming through, domestic institutions offsetting that to the extent of 2,900 crores. In terms of individual stocks and sectors to watch, there's plenty on the radar, so let me quickly place this on your radar. First of all, I'll watch for banks for sure. Why? Because the RBI has been in a bit of an overdrive. There's a lot going on. There's a liquidity push that's come in via a massive swap that the RBI has announced. It's a $10 billion swap line. And, this is going to be infusing about 87,000 crores of liquidity into the markets come the 4th of March. That's when the first leg of the swap gets done. And this is along, lines that the Reserve Bank has already, played out to undo some of the liquidity sucking out that's happening because the RBI has been trying to stabilize the rupee. So there's a reverse rupee swap. But that's not all. RBI also came out with a draft consultation paper on how foreclosure rules need to perhaps change. Now, it's great news for borrowers like you and me, because no penalties, no prepayment charges if you want to go ahead and pre-close your loan. However, how does it work out for banks? That's something that we need to watch out for, because remember, this is a falling rate environment. And if people can quickly take their floating loans, go to the bank and say, hey, we want to foreclose and take a newer loan at a lower cost, is that going to impact NIMs? So let's see. We'll try and get some perspective on this as the day progresses. Power stocks, they've had a very good run towards the end of last week. And we have some interesting statements from both the Power Minister as well as the Power Secretary. So just putting that on your radar as well. The Power Minister is talking about peak demand. We know we're getting into summer. And this time's number obviously will supersede last time's number. And that number for the expectation is 270 gigawatts. And the minister is saying that we are well equipped to sort of take care of this peak demand as well. Not just that, he's made some very bullish comments on transmission, saying 9 lakh crore rupees of investment opportunities are there in the transmission sector. You'll hear from one of the companies that could be participating in some of these opportunities as we go along in the show. The Power Secretary, talking about the peak power demand, is actually saying that maybe we can, India will invoke Section 11 if needed again, which means that plants will be told to operate at 100% capacity to meet any potential shortfall, which they don't foresee as of now. And another important point is on market coupling. That's not gone off the radar completely. The Secretary said they're still studying it and will come back with an informed view. So that's on power. Very quickly, lots of stocks and news as well. First of all, there are going to be Nifty changes. Zomato and Jio Financial finally make their entry in the Nifty come the 28th of March. So watch out for these stocks. Britannia and BPCL will be going out. And companies are spending a lot of money and putting that in their own subsidiaries and businesses. We have 3 of these big names today. Bajaj Auto is spending about 1,350 crore rupees, infusing that money in their Netherlands subsidiary. We need to see how the market takes this, because the expectation is this could go in to help KTM, and KTM is undergoing substantial financial stress at this point in time. Bharti is increasing its shareholding in Airtel Africa by 5%. That's an important development to note. And last but not the least, Swiggy is investing more in its logistics arm, Kospi. And it's not a small amount. They're investing 1,000 crores. So India Inc. on an investment overdrive. We'll see how the stocks react. But first, we have to navigate through some of these uncertain global cues, Nigel.
Well, that's right. And global cues are uncertain. But a couple of points that you all mentioned, right? The RBI pushing in some liquidity, that's positive. The US services data wasn't very, very good. But the India export services data was very good. 24% growth out there, point number one. Point number two, the power demand, 6.5% growth, very, very good. FASTag numbers are looking good. And also the total air transport as well, the total number of passengers flying by, flying in India, that's looking good. So a couple of factors on the domestic front says that the economy is not in a not in a very, very bad state. And in fact, it's quite good. The markets may be wobbly, but the economy is pretty okay. Let's take the global cues though. You had the US data that wasn't very, very good. From an India market perspective, well, the dollar index cooled off. The yields came off a little bit. And also you had Brent crude prices that are fairly stable at around $74.5 per barrel. So all these parameters, they are working, in line with what the bulls will want here. So that's one positive. Next up, the quintuple lows. That's going to be tested in today's trading session, because 5 times we have gone to that mark of around 22,700 to around 22,750. And, today we're going to be starting off below that mark. So the quintuple lows are going to be tested in trade today, which tells you that if you look at the data points, the 22,500, 22,600 mark becomes very, very important on a closing basis. You don't want to end below this mark. And it's important because this week you have the monthly expiry as well that plays out. The FIs and clients on opposite sides, not too much movement out there. So I'm just going to give you the net positioning. The FIs, well, they are net short, close to 2 lakh contracts on the short side, while you have the clients as well that are net long. But that's important, right? Yes, the global markets are in a bit of a tizzy. But the Indian markets, well, some of the pain has already been factored in, because the Nifty actually has underperformed, while the other markets actually, they have been outperforming in 2025 so far. So some part of the bad news is already in the price. Obviously, if the globe goes, sees a sharp pullback, then we won't be protected. But otherwise, we have factored in, some kind of that underperformance already. So that's an important data point as well. Options data comes up for you on the screen. 22,800 call, 22,500 put. Both of them did see a fair bit of action, which brings us to the levels. On the upside, the 23,000 mark, we haven't been able to get past that. So that's going to be important. As of now, positioning is such that we don't break the 23,000 mark on the upside. And the risk is that the 22,500 mark gets broken on the downside. So that's important. The Nifty Bank levels, well, we seem to be in this band of close to around 1,000 points. So on the downside, the recent low of around 48,500 becomes important. On the upside, the 20-day MA is at around that 49,500 approximately. So that's the crucial level you're looking at. And finally, I want to highlight 2 stocks, since there's going to be a lot of focus on large caps. Mahindra & Mahindra down close to around 14%, while the Nifty is down close to around 1%. It's underperformed the Nifty in the recent past. But Jeffrey says valuation-wise things are looking up, and they do not believe that Tesla will be a big threat. So I'll keep an eye out on this stock in today's trading session. Next up, since power demand is good, and it'll only get better from here on, Coal India is a stock that I'll be looking at, because coal supplies will be important, and also valuations, comfort you have there, you have the dividend yield as well. So that's the other one that I'm looking at. And finally, last week, the Nifty end more or less flattish, but the broader market saw a lot of traction. So don't throw in the towel. There'll be various stocks that have come back from the recent peak, but they're still going to be up there. So be selective, stock-specific action, and hopefully on the headline index today, you don't break those lows. That 22,600 mark becomes extremely important.